All right, good morning, everyone. It is 8:39 in the morning of September 29th, 2022, and this is my pre-market strategy session. And so I am concentrating primarily on the Qs, probably, and that'll probably be true for the next 6 to 12 months. Uh, the title of today's video is Qs price action between now and earnings. And here's so the tech sector starts its earnings season on October 11th next month. And what happens between now and then, and even what happens then, actually, is a mystery. I mean, there are only very few people who really know exactly what's going to happen. And so this video is just kind of a sort of in the meantime. Personally, I think that earnings are going to take a hit. There are going to be some misses on the earnings side, and there are going to be reports. If you dig into the financials, whether it's the balance statement, the statement of cash flows, or the earnings report, in there are going to be details that will disappoint Wall Street. And I believe, this is just my personal opinion, that there will be a bit of a rout coming into earnings season. There's probably going to be downward adjustments to earnings per share and revenues and so forth that are reported during this report. Going forward, economic conditions are expected to be slowing as of right now, going into the second quarter. The second quarter of 2023 is forecast to be slow, and so that leaves the quarter that's behind us, almost behind us. Then third quarter of this year. Let's see. Actually, the fourth quarter. We're about to finish up the third quarter, and we're going into the fourth quarter. And then there's Q1 2023 and Q2 2023. They're all forecast to be slowing sales, slowing revenues, decreased margins, all sorts of shenanigans on balance sheets. Will be disclosed, coming through. So it's bearish. The outlook is bearish. Now, what will Wall Street do? Will Wall Street sell ahead of earnings season, or will Wall Street allow things to run up a little bit going into earnings season, and then let the bad news cause the next extension of this leg down? And it's unusual for me to see Wall Street not be ahead of the game. Who knows? I don't. And so really, all I can do is go off of price action. This blue line right here. I had this on the 14th yesterday. I put this blue line on yesterday. It was over here on the 14th because that's technically when that was a guess of when earnings season would kick off, but I just kind of looked up when earnings were reported by the tech sector, and it starts October 11th. And so between now and then, I can only go on price action. And so what will happen? We've got a couple of price levels here: 293.05, 280.07, and 271.39, and I'll show you where I got those. So 271.39 is the low that was put in. This is the closing low that was put on in the 16th of June. This is the most recent low. And so if between now and when earnings season kicks off, we get a drop below a retest of 271.39 and the subsequent failure of that, then I'm going to play that. If we get a move up and it's really quite interesting. Yesterday it closed just below. So this line at 280.07 is the close from the 22nd of September this last Thursday. Then the 293 level is this closing low over here on the 6th of September. And these are all price action. These are all price areas that are going to act as support and resistance right in here. And it's pretty easy to see. You can see over here at 293, found support and then crashed down to the number, spent a day trying to test and rally off of that number, and the next day just tanked. It closed below it, came back, tried to get back up above it again, and was soundly rejected at 293, and then took off to the downside. The next important level here after that was this 271.39, where some buyers came in. I don't know if short covers, if these were price targets for shorts on Qs or what, but it did coincide with this closing low over here, and so some bears, most likely what happened is that some bears took some profits right in here and are looking for the next leg up to add to their short positions. Will that happen? I don't know, because what might happen is instead that the price fails, tries to retest 271.39 and then fails further. So we're getting this stepping down action happening here. And, it just kind of makes sense for it to continue. But then it also makes sense to see Wall Street run it up a little bit into earnings for it to then fall away. So I don't know what's going to happen, but I do know that if we go as high as 293.05 and that price action coincides with the 11th of October, I'm going to be shorting like a madman. Especially if my relative strength indices over here start going into overbought and so forth. So on the daily chart here, you can see in the bottom chart, I've got the relative strength index on the daily, and it's coming out of oversold. So conditions are oversold. Let's see how high, and I'm really guessing here, but I'm guessing that things are going to get run up. The most likely scenario in my mind, this is personal opinion, based on nothing other than what I can observe. So this is purely empirical. My best guess scenario is that Wall Street sees how far it can run up going into earnings season on the Qs. So definitely I'm looking for a short-term move to the upside on the Qs, possibly hitting resistance at 293. And if 293 acts as resistance at about the same time that earnings season cranks up, then it makes really just like perfect sense to start shorting there, especially if we can get into close to overbought conditions on the daily relative strength index on the Qs. Yeah, and so in the meantime, I'm bearish, right? Short term, I wouldn't be surprised to see an up movement in the Qs, or it would just make sense to me to see some up movement in the Qs going into October 11th. So I'll probably be sitting on my hands quite a bit over the next couple of weeks. And really, outside of that, I mean, here we've got the VIX. The VIX is in the 30s. Anything above 30 is a place on the VIX where you don't want to own stocks. However, we have seen sort of this level up here. I'm going to put a line. This level, generally speaking, in this area right here, in the orange line. Let me change the color. It's brown. Let's go to orange. Let's make it a brighter orange. Yeah, this orange line right here has been a cap for volatility. I think eventually it's going to break out. Eventually, this sort of range here, this mid-30s range, is going to get destroyed, and we're going to see volatility go back into the 40s, and even possibly the 50s. Once it gets past 40, it's like, okay, well, how high exactly is it going to go? I mean, back here we were in the 80s. So the idea here is to just kind of sit tight and let things develop. A push down below this price support at 271, and then confirmation below takes anything bullish off the board going into earnings. Hanging out above 271 going into earnings just sort of sets up the next leg for the down move right here. So then let's take yesterday the Bank of England came out with some quantitative easing. They're starting to buy bonds again, which is going to put pressure on rates. So rates are going to come down, and it's also going to put pressure on the British pound. And it acted yesterday really as quite. I mean, yesterday I think the Qs were up 2%. The SPY was up nearly 2%. So the news that the Bank of England is coming out with the stimulus really was really bullish for the market. It's short term. It's a sugar high, and it's a sugar high at the wrong time. I think the British Islands are about to experience quite a bit of inflation. They're already experiencing inflation, and to throw kind of fuel on the fire, the Bank of England just decided to start doing some quantitative easing, which is it's bullish for the stock market. If the U.S. Fed starts doing the same thing, watch the hell out. This is all. If the Fed comes out and announces that it's going to start up a new QE program, or is going to stop raising rates, or whatever it is, it's off to the races. It's off to the races if the central bank, if the Fed, our Federal Reserve now announces something like that. People are going to drop their shorts like a bad habit and start buying. I don't think that's going to happen. The Fed has been quite resolute that they are going to fight inflation, and the Fed knows hyperinflation. If the Fed eases now, it will cause hyperinflation. The Fed knows that hyperinflation. There's no better way to destroy an economy or a society than to send it spinning into hyperinflation. The alternatives to going into inflation or hyperinflation is recession or depression, and that is actually a much better scenario. Even a depression is a much better scenario than hyperinflation. So, okay, gold definitely caught a bid yesterday on falling rates. An environment where rates are being raised, rates are going up, then gold will definitely catch some pressure to the downside. All right, everybody, that is going to be it for me today. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you at tomorrow morning's strategy session. Thanks for tuning in.